Welcome to Office Hours at TradersPost for January 28th, 2025. I'm Tom Hartman, Marketing Manager here at TradersPost, along with Mike Christensen, co-founder and CEO. We're here to answer your questions about using TradersPost to automate your trades. As always, we want to make TradersPost the best automated trading platform for you and your trading needs. And for that, we need you, your feedback, and your questions. So we thank you for them. How's it going, Mike?
Doing well. Small correction there. I am CSO, not CEO. That role is held by the illustrious John Wage himself.
That's from when John was on the show last week. I did not change that in my teleprompter. There we go. Perfect. And I'll chuck that up to the pneumonia that's just wrecking through my house right now. Pretty crazy. I don't even have the joy of being the sick one, and my wife takes care of me. I'm gonna take her of the kids. So not fair. Men should be sick.
You are off the hook, my friend. Taking care of a sick family is never never fun. Gosh, we're both struggling here. What's going on?
I'm gonna blame it on DeepSeek. I was trying to coin this DeepSeek dip as like this marker in the chart. No one's gonna be able to say that tongue twister. It doesn't roll off the tongue.
Yeah. It deep sixth the market, that's for sure.
That's right. All right, so we have a nice crop of questions this week. It's actually pretty active with the number of people just looking for help, looking for assistance, looking for feedback on the market. I always like when a bunch of the questions that we get are about people like, hey, what would you recommend, and how would I avoid making more mistakes, and is this a good idea, a good strategy? I like when conversations like that are happening, because it means like there's a vibrant community, people are helping each other.
Mm-hmm.
Along that the line, someone was sharing in our Discord group a clip from a trading bot session show that you do that I thought was pretty interesting. It's a clip from Kevin Davey,
Mm-hmm.
and the point that the person liked was this idea of how Kevin Davey basically found his success.
Sure.
So I thought it might be nice just to play that clip from Trading Bot Sessions,
Yeah.
so you guys can see it too.
Let's do it. Kevin Davey's awesome. He's a competitive futures trader that largely uses algorithms or automated algorithms to compete in that space.
That's right. All right. Show clip. Here we go.
Man, my hair was different.
Sure. It was the algo itself. I think I have it in one of my YouTube videos. It was just a simple trend following type algo that I applied to 8 different markets, and at least the one year that I won it. And what really set it apart was in the particular year I won, copper. The price of copper just went through the roof. And a trend follower, that's where most of my profits came from. A lot of the other ones just were kind of break even or lost money. But what was interesting about that now, and I didn't realize it at the time, was the importance of diversification just for overall trading. That it's a lot nicer to have a copper algo and maybe a 30-year bond algo and a euro currency algo. You have a bunch of different market sectors, and that tends to smooth out your equity curve. And I didn't fully appreciate it at the time, since I was just going for maximum gains. And I think my thinking was, hey, if I trade 8 different markets, hopefully one will catch a big trend, and that'll outshine everything else. And that's what happened. But the lessons I learned from that really, even today, still kind of resonate in my trading.
Now, what I found interesting about that interview is Kevin goes on to explain that he has something like 40 or 50 different algorithms that he's running at the same time now,
Right.
which illustrates the point about automated trading right up front. Obviously, diversification was a key to his discovery that it could smooth out his equity curve, which absolutely makes sense, aligns with modern portfolio theory, aligns with risk management techniques. But the most interesting thing here is that automation unleashes our ability to do something like this, where we can be trading 40 or 50 markets at the same time, which makes TradersPost such a an important platform to use if you're looking to accomplish something like this. You can, on TradingView, you could set up a trend following strategy on all those different markets and just have all those alerts coming to TradersPost at the same time.
I also love the idea that there's not a one size fits all when it comes to trading. There are some ideas that you need to make sure that you get in your head, position sizes, risk, and that sort of thing. But when someone finds something that works for them, and this, by the way, this clip came from TradingBot sessions, but it's referenced by Father of All Cats, JT, on Discord. So nice shout out to JT. Thank you so much for that. What I find to be most fascinating about it all is that. So I'm just trying to get out of the screen here. Okay. Is that it's not one size fits all, and once you find out what's the thing that's causing you to be have a problem and where you could find an edge, the idea of automating it it becomes like the obvious thing to do next. You go, okay, I figured out what the steps are. Oftentimes in that it's my interpretation that's like the problem. Let me remove myself from the situation, put it into an automated system, let it run, and I'll go work on the next one. Yep. And I'm wondering if you're finding the conversation easier in your circle, where now that people are using AI more now in their day-to-day, at least the people that I know are using AI more and more now, the idea of automation now becomes like, oh, okay, I should be automating. Whereas before, if I told someone about using a macro on their computer in order to set up their computer for the day, they're like, why would I want to do that? And now I go on Twitter and it's like a million people going, here's a macro, like here's an agent AI that can do this thing for you. It's like, no, once you automate a process that you've gotten down pat, now you're freed up, your mental capacity is freed up, and your time is freed up to go do other things, which is what like TradingView is great for.
Yeah. And I do think that AI has supported the growth of not only our business, but the industry of automated trading, insofar that it's made participants more comfortable with this approach, because it's kind of teaching all the tenets of the process, how the backtesting process needs to work, how to trust the algorithm, how to use position sizing techniques, how to manage risk. There's a whole education that I think you can get from AI, which is very commonly available in all kinds of books and classes that are available online. But you're just a few questions away from some discovery by just having a conversation with ChatGPT for half of an afternoon, and getting to a point where you're like, okay, well, let me think about how I could set my strategy up on TradersPost using just a small amount of capital and give it a run. Always we are encouraging people to try to use as many of the tools as possible that get them comfortable with using an automated approach. But how the thinking goes, what risks you're really exposing yourself to, and I think it's great when that kind of thing happens, where you're using the tool as an educational resource as well. Because I think that honestly, one of the biggest risks to performance with automated trading is you basically just pulling the plug too early, or not understanding that you need the walk forward test to give you the data you need to confirm that the strategy is actually going to work, or pulling the plug when the first couple of bad trades come through. The risk in it not working for you is really you kind of getting in the way.
I set up my rules this week, and then I had this short all set up, and I looked at it and I was like, I couldn't understand why my signal was saying the price should get down to this one level, and I go, but I don't see it. I didn't understand the catalyst. I didn't understand what would happen, and so I just completely overtraded within that period, ignored my signal, and then went long when I shouldn't have. I was just too nervous. Then the deep seek issue came out. The markets came down, and the price went straight down like a knife, exactly to where my signal was saying. I was like, if I had just let the automation take care of it, I would have been fine. And I was so upset. And every time that happens to me, there's a part of me that's proud that I work with TradersPost. Another part I go, it's just like this mirror of like your failure. If you just use the platform the way that you're talking to other people, you would have been successful in this trade. Okay, I learned my lesson. All right. So next up, a couple of questions from support and from Discord. First, someone was asking, if the premium account isn't enough for me, could I get a discount on subsequent accounts? Can my second account be an affiliate on my first account?
So that is against our terms for the referral program. You can't refer yourself to receive a referral credit. In fact, we do have tracking mechanisms in place with Rewardful to ensure that you're not self-referring. That said, we are actively working on pricing changes that give you access to increase the number of brokers or strategies or paper brokers that you need in your account. We're calling this the a la carte pricing model. And it's something we are hoping to launch in the near future here to give you more granular control over your subscription so you can access as many of these features that you're interested in, and then keep it all in one account. It's not complicated that way. It's, kind of a struggle to move from one account to the next. We'd rather make it as easy as possible for you. So stay tuned. We'll have some pricing changes in place for you.
Excellent. I thought this was interesting. Is there any speed difference between sending action exit versus action sell with a quantity specified?
That's a good question. I don't think so, because in either case, we still have to look up your positions and open positions to confirm the existing size or existing quantities of those positions in advance. So I don't think it cuts down on the number of queries, but maybe John can chime in on this one and we can circle back to this question.
Right. Just to be clear, I think this question was nestled within the conversation of like the person trying to get as close to high frequency trading as possible. And it follows up with later on, someone was asking, does TrendSpider have lower latency for signals, like from TrendSpider to us versus TradingView to us? And if so, would it allow me to have more reliable trades, high frequency trades at lower time frames? So I didn't know the answer to this. Does TrendSpider send their webhook signals faster than TradingView?
It's possible. I know TradingView, of course, is orders of magnitude larger than TrendSpider is in terms of its overall demand on their servers for outgoing webhook requests. So it's totally possible that TrendSpider has lower latency for sending signals to TradersPost just because there's just not as much going on there, less throughput, less bandwidth, so on and so forth.
John says no here, but is that the question that we were?
That was the
before?
previous question. Yeah. So there's no speed improvement for action equals exit versus action equals sell. That was John's response.
Okay, perfect. All right. Next up, is there any way to see what the latency question, what the TradingView latency is? Because it is quite immediate, the style of trading. They trade quick in and out. So they want to know, is there any way of measuring what the latency is from TradingView to us?
Kind of. You can send the time now parameter in your JSON message, which will tell us when the alert was actually triggered on TradingView. And then you can compare that to the time that we received the signal on our side. And that'll give you a sense of that delay that exists between the alert actually firing and the alert being received. The tough part there is that in some cases, we don't get the microseconds available from TradingView. So it's hard to tell whether it's more than a second or slightly less than a second. We can't tell the sub-second timing of that. But for the most part, it's about a second to leave TradingView and make it to our servers.
When TradingView prepares the alert message, is that then queued and that's where there could be a delay to send to us? Or is it generated at the moment that I guess it would have to be queued first and then sent via webhook? Because there's always these stories I hear every once in a while, I mean, not very often, where someone goes, oh, it took 30 seconds for my alert to come to me. So in that sense, would the time be the time that on the TradingView server, the alert was created?
That's right.
When it was sent? Okay.
Yeah, our understanding is that when you use the time now parameter, that should be the time that the alert was actually triggered by the algorithm that is looking for that event, not the time that it actually sent the webhook out to TradersPost. So the time in between the alert firing and received by TradersPost includes that time to actually create the webhook request.
Cool. All right, next up is a question about content creation that we've been doing on YouTube, and someone was asking, I was in a conversation, and they were like, "Hey, would it be possible for you guys to do walkthroughs for connecting TradesPost to a prop firm,
Sure.
but where you guys show us all the screenshots and all the steps on the prop firm side as well?" So for each one of the different prop firms, so that they can see the interfaces, they can see how all that works. I thought that was an interesting request, and I thought I'd put it to you.
Yeah, I think we absolutely should. I think that's a great thing to cover on Blueprint. I can spin up another account on Top Step and kind of run through the whole process. We can show how to use it for the practice account, how to use it for an eval account, how to get the alert set up, and basically the process through and through. I've spent a bit of time writing an algorithm on TradingView's PineScript that allows me to keep track of the rules associated with the account. So I'm happy to share that as well. And then I'm also working on another tool that kind of does more deep back tests on how many times an eval account would be passed if you use your strategy. So maybe we can cover some of that stuff as well.
Awesome. All right. Is there a JSON message I can send that will close all my open positions?
Yep, that would be the action equals exit message. So you would base it on a per ticket, a ticker basis. Now, if you're asking, will it close all of my positions across all tickers? No, everything in the TradersPost environment right now is based on a per ticker basis. But it's certainly a feature request we can explore, where maybe we can send a different type of rule where you don't have to send the ticker, or maybe the ticker is a keyword like all or something like that. That would be something we'd have to explore and get back to you on.
All makes sense to me. The idea that someone would accidentally send something that closes all their positions in their account, I can just imagine the nightmare sport tickets that we get for that.
I mean, yeah, maybe. I mean, obviously, all is not the right keyword to use, because that's actually a real ticker. I believe that's Allstate. So it wouldn't be all. It would be like star. You would send ticker is star, and action is exit, and then that could close everything. But that's just theoretical. We don't have that feature at the moment. Right now, you still have to send the exit messages on a per ticker basis.
Right. Okay, so this came up. When I use the sentiment parameter, sometimes my position is sold completely instead of just the value assigned to quantity. How can I avoid that? A little bit more context here. What was going on is that the user, what was coming through was sentiment flat, because the user was using the placeholder strategy dot market underscore position, something like that, and then flat was coming through, but the user didn't know that flat was like one of the options that could come through the parameters. They were just copying and pasting this inside of the as a JSON payload, and so they were surprised when the position closed, because they had sent a quantity as well. So the sentiment flat will supersede whatever quantity is there, right?
Well, if you send sentiment flat, then it's going to exit the current position that's there. If you send sentiment long, or sentiment, is it sentiment bullish? Shoot, now I need to pull up the docs.
It's long, short, and flat, I believe.
Yeah, so if you send long and you send a quantity less than what you currently have, then we'll sell the amount that gets you to that target quantity. So if you don't want it to sell off the whole position, you would just have to not use the sentiment parameter. It's like worth pointing out that sentiment isn't a required parameter. You can stick with simpler messages, action buy, action sell, and then define the quantity that you want to buy or sell. The sentiment parameter was really only designed to stay in line with the way that the TradingView simulator works, depending on your strategy instructions and how it should, do partial entries and partial exits. You may have some sentiment there that tells it to remain in a position, or partial long position that remains. So we tried to build the system to line up with the way that TradingView works. But if you have a different approach, or you want it to behave in a certain way, you might consider avoiding the sentiment parameter and specify exactly what you want it to do with the action and quantity parameters.
Just to bring up what Richard was saying in chat, a conversation that was happening there between him and John, are there any plans to include analytics on different subscription strategies to help traders fine-tune their trading strategies? And John replies that yes, the work is in progress, and we hope to launch later this year. And Jupiter follows up with, yes, it is needed. And we understand that's why we're hard at work on it. And it actually looks really, really good.
Jupiter was responding to the need for prop firm walkthroughs, but we
Is that what it
definitely,
was?
yeah. Because Jupiter responded immediately after walkthroughs, please. The demand on obviously prop firm content is obvious. We'll do some work on that, no question. The analytics obviously are very exciting for us. It's been long requested for some time now. People want to know if each trade that comes through is actually profitable. And so we're doing a lot of work at the moment to try to show your individual P&L performance on a trade by trade basis, at the strategy level, at the account level, and at the broker level as well.
Perfect. Is it possible to get a notification if I'm using a JSON property that my broker doesn't support? Could that be one of the error messages that are sent by email, or that shows up in a log somewhere in the dashboard? This happens a lot with the bracket orders. If someone sends a bracket order, but there's no the broker doesn't support it, or if Trade of 8, the signal price needs to be sent in order for the take profits and stop loss to work. There's no notification for them at the moment for that. That's what they were referring to.
Got it. That actually should be in your strategy settings. In the subscription, you can be notified of failed trades. In the case of a stop loss not being supported by the broker, that should come back as a rejected order by the broker, and you should get notified on that. There is an email notification feature beyond that, but the failure of like stop losses are supported or not supported, I don't think we actually kick that back. So yeah, sorry, John just confirmed we don't actually have that at the moment. The JSON part of your request would just be ignored if it's not supported. So yeah, we'll take that into account. We'll see if that's a feature we can enhance and at least kick that back as a notification so that you're aware that it doesn't work with that broker.
Cool. And then, are options on futures something that is planned for 2025?
Not at the moment. That's a fairly small derivatives market that isn't nearly as big as some of the other requests that we've received. We would like to start looking at margin in crypto as well as futures in crypto. But the other big asset class that we have not yet covered that's really important to many, many people on the wait list is Forex. So we would likely be exploring those three improvements for 2025 before we even touch options on futures.
If it matters at all, this is as a bridge from support to here. 2 people asked for that this week, so I was like, oh, I don't normally see that, but options on futures, it's near and dear to my heart because that's what I used to trade, options on futures, but not anymore because it's so easy to lose your money that way. All right, so last question here. Someone was asking, I am currently using your platform to manage automated trading via webhooks. In my strategy settings, I have explicitly set the time enforce option to day, as I want all positions to be closed automatically at the end of the trading day. However, I have noticed that my bots sometimes leave positions open after the trading hours have ended. Can you please clarify why this might be happening and advise on what steps I should take to ensure that positions are not left open beyond the designated trading hours?
So we need to clarify the difference between time in force for an unfilled order versus an open position. The time in force parameter is really in reference to how long how long the order should remain in force while you're waiting for it to be filled. If it is not filled by the end of the day, then that order would be canceled. But if that order was filled, the time in force is no longer relevant. There is no feature with brokers that automatically closes positions at the end of the day. We have some features that we've worked on, specifically some PineScript tools that help you send a signal to TradersPost to close your positions at the end of the day. But that's sort of a separate tool that you can use. So that time in force instruction is really just related to whether it should cancel the order if it doesn't get filled by the end of the day.
Right. All right. Well, that's it for the questions that we had for this week. I'm just taking a look at the chat real quick. I don't know if you've seen any questions in there that we need to handle. John's been doing a great job answering the people there. If you guys do have any questions for next week, please feel free to post them as comments on the YouTube video. You can also send them as a message to our support email or in the back end of your TradersPost. You can ask within the message bubble at the bottom right. You can also message on Discord, and chances are people are going to answer your question way before next Tuesday. I get that, but we'll be happy to cover some of the stuff here. When you ask a question for yourself, it also helps everybody else, and we're happy with that. So for now, we'll leave that be. We will be back next Tuesday with more office hours. On Thursday, we will be here for Blueprint. We'll be doing walkthroughs about either beginner or intermediate stuff for developing an automated strategy. And on Friday, we'll be back for after hours with our market commentary. Until then, we wish you a happy trading week.
Cheers, everyone.